Recording as we finish up chapter 22. Okay. Crab Company reported 80,000 of selling and administrative expenses on its income statement for the past year. Assuming the direct method is used, how would these items be handled in converting the accrual-based selling and advertisement expenses to cash basis? So you want to know, what do you do with your depreciation? And so we know from accrual basis to cash basis, we have to deduct. So it's either A or C. And then prepaid expenses, this is an increase. How does that affect when a prepaid account increases using the direct method? And the answer is it's added to. A decrease in accounts receivable during a period would require which of the following adjustments in determining cash flows from operating? And so the direct method, if you have a decrease in accounts receivable, that increases. And in the indirect method, it also increases. The assumption there is that you're receiving the cash. 3, in determining net cash flow from operating activities, a decrease in accounts payable during a period, C, is added to the cost of goods sold under the direct method. Declaration of a cash dividend on common stock affects cash flows from operating activities under the direct method and indirect method as follows. So under the direct method, it has no effect. And under the indirect method, it has no effect. Where do dividends go? They're in the financing section, but they have to actually be paid, not declared. A statement of cash flows typically would not disclose the effects of, and this is stock dividends declared. The answers are C, 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 D, and B. Okay, understand and prepare the direct method of calculating net cash flows on operations. So keep in mind, with the two methods, both the investing and financing sections are going to be the same. The only difference comes from in the operating cash flows method. All right. And we report cash receipts and cash disbursements from operating activities. Okay. Now this is kind of a breakdown of what you're going to see. So you kind of have to report, okay, these are my cash receipts from sales of goods to services, from receipts of interest and dividends. So this is kind of separate, right? And then you have to report to suppliers, to employees for operating expenses, for interest, and for taxes. All right, those are kind of the minimum requirement. The FASB says you can add additional things if you would like to disclose them, if it would be valuable. So a couple things, companies that use the direct method are required at a minimum to report separate the following classes. So these are our classes of receipts that they have to report. Cash collected from customers. I mean, it's basically in that. Interest and dividends received. And then other operating cash. I should say receipts. Okay, for the payments, cash paid to employers or employees, sorry, and suppliers of goods or services. Interest paid. Income taxes paid. And other operating cash payments. So you kind of have to keep a little reconciliation with you to calculate how you're going to be able to get these answers. So how do you get cash receipts from customers? You take sales, you subtract the increase. Oh. So I'm going to say less the increase in accounts receivable plus decrease in accounts receivable minus write-offs plus collection of AR previously written off and that equals your cash collections. Now for your cash paid to suppliers, you start with cost of goods sold. Less a decrease in inventory. Plus an increase in inventory. Less an increase in accounts payable. Plus a decrease in accounts payable. And that equals cash payments to suppliers. So now we've got cash paid for operating expenses. So we have operating expenses that we're starting with, plus an increase in prepaid expenses. Less a decrease in prepaid expenses. Plus decrease in accrued expenses payable. Less an increase in accrued expenses payable. And that equals cash paid for operating activities. Now notice that in this example, everything's kind of lumped into this operating activities, like sales is in there, sales expenses, etc. So they just listed all the operating activities instead of the employees' wages separately. Cash paid for income taxes, take your income tax expense. plus the decrease in income tax payable less an increase in income tax payable plus an increase in the deferred tax liability less a decrease in the deferred tax liability less a decrease in deferred tax asset. Oh, too many R's there. Plus an increase in deferred tax asset equals cash paid for taxes. Take your time, get them all down. I'll give you a minute to catch up in case I'm going a little too fast. Sorry about that.
The deferred tax asset and deferred tax liability are not treated the same. You lost the decrease in tax.
I might have gotten these to the deferred tax liability plus. Yeah. Sorry, you're correct. Decrease. Thank you. Increase. Just correct the deferred tax liability. I misread it. And I don't keep, unfortunately, these in my memory, as you can imagine. Okay, so now cash paid for interest would be, start with your interest expense plus the premium amortization less the discount amortization plus the decrease in interest payable less an increase in interest payable. And that equals cash paid for interest. Excuse me. This one, cash paid for other operating expenses. So you start with other operating expenses, if applicable. You subtract bad debts expense. You subtract a decrease in prepaid expenses plus an increase in prepaid expenses plus decrease in salaries payable less an increase in salaries payable equals cash payments for other expenses. So what you want to make sure though is that you don't, count the same changes in prepaid expenses in both cases. So if you used your prepaid expenses up here that are related, you wouldn't use them down here in the other. So we're going to focus on our operating activities, and we don't start with net income. We start with cash received from customers, less cash payments. And then you have two suppliers. For operating expenses. For interest. And for income taxes. We're going to put little letters in here. And C. And D. So let's go ahead and look at how we got our cash received from customers. We're going to go down to our schedule. And I tried to put this separately so you could kind of look at both of them at the same time, hopefully. Okay, and we have our sales revenue, which comes directly from the income statement, right? And then we have to look at our formulas. So with our sales revenue, we want to go back here and say, okay, what do we need? We need the changes in accounts receivable, the write-offs, and the collections. So here we have sales revenue less increase in accounts receivable. And so that's 11,000. And you should see that right on the face of the statement. You can check that box off. And we don't have any other related transactions, so this is cash from customers. And that's 327,150. If you want to put brackets on these, that's fine. I don't get crabby about that, and it may help you. For me, if I see this less over here, then I don't put brackets on it, because less a negative would be a positive. So we put that in here, 327,150. And now we've got to look at our cash payments to suppliers. So we go down to Schedule B. And we start with our cost of goods sold, which was 175,000. That comes right off the income statement. And then we have less an increase in accounts payable and less a decrease in inventory. So we just look at the two changes in those accounts. And we see that it was 6,000 and 20,000. And so our cash payments to suppliers is 149,000. So we put that up here. Now we want to go to our operating expenses. And our operating expenses start with 120,000 plus increase in prepaid rent. So that was 1,000. Less depreciation expense. Now you have to calculate it, but I'm going to give it to you here. It's 24,000. Less amortization of copyright. 4,000. And then the last one we have is less the increase in salaries and wages payable. And that's also 4,000. So if you sum this total up, you get 89,000. And that's cash paid for operating expenses. So we put that amount in there, 89,000. We have to find our interest. Coming directly off the income statement, 11,400. And then for income taxes, we go down to D. And we start with our income tax expense. And we have to look at our DTAs, our DTLs, and our income tax expense payable. And so we add the decrease in income tax payable. And that number is 2,000. We don't have DTLs or DTAs to worry about here. And so cash paid for income tax expense equals 8,750. So we put that up here. And I have this total at 258,150. And so net cash provided by investing activities, operating activities, is the difference between the 327 and the 258, or 69,000. So I want to go ahead and skip the investing activities part of it because I want to get the other example and do the direct method on there for you. So let's take a look at example 2. Okay, and we can go all the way to cash receipts from customers, the Schedule A. And so we have revenues of 1,604,000. Then we have less an increase in accounts receivable. And so this is 50,000. And so cash receipts from customer are 1,554,000. So we carry that back up. $1,554,000. And we'll have less cash payments. And so the first one we have is for operating expenses. And so the computation of cash payments is operating expenses. And this is taken directly from the income statement. $1,280,000. Note that that number excludes depreciation, right? So we don't have to pull depreciation back out of it. And then we would deduct the increase in accounts payable. So that's 50,000. And so we have cash payments for operating expenses. And that'd be 1,230,000. This is operating expenses. So what do we come up with there? 1,230,000. Now the next one says for income taxes. And that's 98,500. And I'll show you how we get there. Income tax expense per the income statement. We add the decrease in income taxes payable. That's 8,500. And so cash payments or income tax are 98,500, bless you. We plug that in. We total up the two pieces there. I have 1,328,500. And then you get net cash provided by operating activities. And that's 225,500. Okay, so there's another useful guide on the back, some information about special cases that they hadn't talked about before. You can use it as a reference when you're taking your test. And I will plug in the answers here before I post it, but I don't expect you to have to stay if you don't want to. You can go as you please. And we got through everything, so no class on Tuesday.
That test will be Sunday.
Both parts will be due. So Tuesday is when the one that you're the handout one. And then on Monday, you'll have the questions and chapter 21's exam due. Oh, by the way, some people asked for extra credit. And so if you go into your assignments, there's an extra credit case. This is my best guess that it'll take about 30 minutes to an hour, depending on whether or not you've had an ethics case before. And so I'll be honest with you, this is some of the research that I do, and I like to do ethics cases. And so by you guys doing it as extra credit, it will help me gather data and determine whether or not the case actually tests what it's supposed to test. So what you do is just open it up, read the draft, and then open this survey up, answer the questions, and upload it back into Canvas before December 5th if you want it. And it's 30 extra credit points. So it's essentially like an assignment. And again, that's strictly optional for you if you want to do it.